Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, so we've got a little bit of continuation of downside follow-through from what we saw late last week. We went up and made this high at 25.94.5, finished off this upper band ride. We saw a quick spike down that could not hold the daily mid-band. Then on Friday, we saw daily mid-band support, but we also saw an inability to get through the 9-day simple moving average. What we've seen in the overnight is we saw a pop right off the open, 25.84.5. We actually have matching highs at 84.5 that were followed up by some downside. And what I'm curious to see now is your new weekly pivot is up at 25.78.92. That went resistance at about 4:45, 5 o'clock in the morning. We're now seeing a move down to test the daily mid-band at 25.72.5. Here's an hourly chart. So 72.5, your daily mid-band, right around this area. Okay, it held here. Okay, it was rejected and came back through Thursday. So Thursday, Friday, rejected but held. Friday, tested and held. Now we're going to head back and see what we can do. The bears have no long-term thesis above the daily mid-band. Above the daily mid-band, our most basic assumption is buy dips, and it's worked for a long time. Below the daily mid-band, you get into a sell rallies type of a deal. So on the daily chart, above the daily mid-band, buy dips. Below the daily mid-band, you sell rallies. So here's your matching overnight highs, 84.5. You had a potential lower high here, so kind of a triangle type of a deal here. It needs to either break out or break down. If it can get below 72.5 and stay there, it can certainly test the lows from Friday down at 71.5. That's not a real issue. The issue is, can they get back to the Thursday low at 63.25? And if they do, what I cannot emphasize enough is, if they do, it needs to be number one, a lower low, and number two, it has to hold the daily mid-band on the way back up. You can't do another V. So if you go down and you do a lower low here, if they wind it back up to test, it needs to fail. And if that happens, I mean, look, you heard it here first, or probably heard it here 5th or 30th or whatever. You could have a red week. I haven't said that in months. But if you do a lower low and daily mid-band goes resistance, you could legitimately have a red week. That directional pricing will work in the bears' favor as you get towards the end of the week. Normally it's worked in the favor of the bulls. What's the most likely scenario? Most likely scenario is we come back right around daily mid-band, we make a higher high, we get back through the weekly pivot. Maybe we fight over the weekly pivot or for a day or two. But once it's established as support, we bleed back up to the upside again. That's what's been happening. There's no reason to expect that anything different is going to happen until it does. So the advantage is always to the bulls as long as we're above that daily mid-band. And the bears have some work to do, but it's not as massive a mountain to climb as it has been in recent weeks. They have a legitimate argument this week. They just need to execute. All right. Everybody have a fantastic day. I will catch everybody for the midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.